Here's a look at where markets ended the week of new record highs on the back of strong earnings, a big rally in technology, and we saw the monthly consumer and producer inflation rates in July flatline. But retail sales, they tumbled unexpectedly. Joining me now, SlateStone Wealth Chief Market Strategist Kenny Polcari. Kenny, it's always great to have you on the show. Technology is back in the high life again. You've got a rally because of strong earnings, and the indices overall are performing quite well. But there does seem to be a trouble spot in retail. That was evidenced in last week's jobs numbers and also this weaker than expected retail sales report.
Right. So I think the retailer, the consumer, is getting a little bit cautious, right? Because as we know, that it's been a little bit difficult. Inflation is still running. Wages aren't keeping up. And so you're seeing a little bit of pressure on retailers. But that doesn't mean it's blowing up the whole story. Look, the market is kissing new highs. The S&P trading now in 7,800 range, which is an all-time high. And so broadly, the market feels okay. But I'm not surprised, and I wouldn't be that concerned yet over how the retailers are doing based on what the consumer feels. I think it's a temporary situation. I think the retailers will do fine after we get through, this earnings season and into the fall.
Well, when it comes to the retailers and the consumer, as you mentioned, it's how consumers feel about things and how they're spending. So elevated oil prices, although they're trading in a range right now in the backdrop of the conflict over in the Middle East, are an issue. They're also an issue as we head into the midterms, Kenny. So we don't know when this is all going to end, but can the consumer withstand gasoline over $4 a gallon?
Well, so that's the issue, right? I mean, it is over $4 a gallon, and so therefore that's some of the pressure. Now, we would like to expect to see oil come in. If gas goes now then again below $4 a gallon into the threes, where maybe we're hoping it's going to go 370, 380. If oil comes down into the 70s and the high 60s, then that would be a benefit for the consumer. But as long as it stays up here in the 80s, 81, 82, 83, and gasoline stays elevated, that's going to continue to put pressure on the consumer going into the fall and going into midterms, and then you know what that means. They'll get frustrated, they're exhausted, they're not happy about it, and they'll vote with their, they'll vote with their feet.
Okay, and the other part of the story is technology. Technology is where the strength is right now. Bank of America issuing what I thought was a little bit of a cautionary note this week, saying markets keep going up, 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 but how much longer can we do this? What do you think?
Right. Well, it's interesting as well. I agree with you. There are estimates as high as 8,400 now for the S&P at year end, I think by Tom Lee, which I think is a little bit aggressive. I was in the 7,600 camp. We're clearly past that. While I do expect a pullback into the fall and then a rally again into the end of the year, I'm thinking we're somewhere between 76 and 7,700. That being said, we've seen how the market has been reacting. We've seen how investors continue to react to the reports, earnings reports, the economic reports, and so they continue to put money to work in stocks. So is it completely out of question? No. Do I think it's getting a little bit stretched? Yes. So I'm in the camp that, 8,000 might be a little aggressive.
Okay.
We'll see.
What do you make of the reports about overspending in tech? This idea that there's debt and leverage and possibly a bubble forming there?
Listen, that has been the conversation, right? And that has been part of the concern. And whether or not we think there's a bubble forming or not, the fact is some of these tech companies are coming out with not only spectacular earnings, but very, very robust forward guidance. And we've seen that over a number of stocks. You saw it yesterday in SanDisk, and you saw how it dragged that whole memory space higher, right? The DRAMs and the MU and Western Digital, because they came out with explosive forward guidance and multi-year agreement. So I'm not in the camp yet that it's a bubble at all. I'm in the camp that they're very real companies with very real earnings, with very real products and technology that's changing the world.
Right, and this is different from 1999 in that regard. The earnings are actually there for these companies, so you do have to consider that. Kenny, I want to ask you about this report. Reports this week that President Trump is considering asking Congress to overhaul the capital gains tax ahead of the midterms, boosting these outdated exclusions. They haven't been touched since 1997. I think this could have a huge impact, at least on the housing market, unlocking some of that supply that people have been holding on to, because if they feel like they'll keep more of what they get, they might even lower the price a little bit.
Well, and I agree. I think it's a fantastic idea. I do agree to your point that hasn't been looked at since 1997. A lot has changed, like everything has changed. And so reworking what those capital gains are, you know, the deductions or the what happens when you sell your house. If you're a couple that's owned this house for 30 years and you've got, you know, a lot of money tied up into it, if they raise that rate, I think they're talking going from 250 and 500 to 500 and $1 million. I think that would absolutely unlock housing for a lot of senior people in the boomers that are in these big houses. The kids are gone, but they don't want to sell them because of the tax implication. If they raise that, if they reconsider that capital gains, that would absolutely unlock, cause people to want to sell these houses. And to your point, they may want to sell them because they're looking to move, and that would bring pressure. That would put some pressure on prices because more people, I think, would come to the market, and then it would open it up in terms of new buyers and people that are potentially looking. The other thing, though, that's going to hold it in place is what happens with rates, right? Higher mortgage rates are going to cause some slowdown, but if more comes to the market, that should put pressure on prices.
All right, Kenny Polcari, great to see you. Thank you so much.
And you as well, Jack.